Well, I can't give you a formulaic approach because I don't use one. If you want a formula, you should go back to graduate school. They'll give you lots of formulas that won't work.
I said, this is the Retail Investor Podcast. No, it's not a podcast. It's a research and educational show whereby we help educate and inform retail investors about the companies in which and also the conditions in which the companies that we invest in operate under. Today, our research is focused on the Pretoria Porcelain Company, which is famously known as PPC. Okay, so the overview of PPC. PPC was founded in 1892 and it was listed in 2009. I mention this because a company's ability to withstand economic tsunamis, whirlwinds, and downturns in economic activity or the business cycle is determined by the number of economic downswings it has experienced and confronted. So for instance, between the year 1892 and 2025, there has been the 1929 stock crash, the 2008 housing bubble, and also the 2019 COVID-19. And secondly, PPC produces 9 million tons a year, and that's about 70% of all the cement that is being produced in South Africa. So South Africa produces about 13 million tons a year as per industry average, and PPC produces 70% of that cement. And thirdly, the CEO of the company is Matthias Cadarelli, and he started working on 2023, and his track record currently now has been good because the company in a long time, almost 7 years, it was starting to first issuing dividends or declaring dividends. PPC is involved in the production of cement, ready mix, construction, aggregate, and fly ash. So cement, you don't have to explain that. Ready mix is the mixture of sand and cement, so that those who are in construction don't have to mix it together. So it's already been mixed. And also fly ash is used in coal production and some other parts that require it. And the customers for PPC include like constructions, chemical and agricultural, and metallurgicals. So the metallurgicals include like people who mine gold, or rather the companies that mine gold and mine metals in general. They do require also cement. And the year end of PPC is 31 March 2025. Not 2025, obviously changes per, but the end month is 31 March. This is important because the date in which the company issues or stops recording their financial statements is the date in which they issue a dividend or they declare a dividend. So you always want to look out for such date.
Albert Einstein once wrote, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Do not be the one paying it."
Okay, now, as you always know that I'm not providing any financial advice here, and I think you know that, but this is just education. So the reason why for a buy is firstly the Minister of Finance in this year's financial budget, he mentioned that South Africa will be issuing an infrastructure bond in the year 2025 and 2026. So that is going to be beneficial to construction companies, and what will be beneficial to construction companies will also be beneficial to cement companies. Secondly, PPC is building a new cement plant in Western Cape. And the Western Cape is one of the provinces in South Africa that has so much interprovincial travel because most people like to live in the Western Cape. And plus the housing there is in demand so much, as I've said, because of interprovincial travels. PPC is very well known in South Africa. As I've said, it's one of it produces 70% of the cement. So it definitely has a strong brand presence in SA. And the share price is trading at 5 rands. So it's one of those sort of penny stocks in the JSE currently. And if you can buy it with 5 rands, money that you can buy, for instance, chips, like snack chips, it's really cheap. And also the dividend, they do pay dividend. And as you can see from the graphs, that the dividend that they have paid last year is almost at 17.
Warren Buffett most famously said, someone came up to him during the 2008 when the stock market went way down. They said, Mr. Buffett, you lost $10 million today on your portfolio. He said, I didn't lose anything. I didn't sell it. It went down in value, but I didn't sell it. It'll come back up. And then you'll say.
So the 5 reasons why it's a buy, it's because firstly, Chinese imports. It's estimated that over 1 million cement in South Africa is being imported from China. And it's cheap imports. It's cement that is much more affordable compared to local prices of cement that is produced by local producers. So that's going to be a challenge for PPC and other industry participants locally, obviously. Even though the South African government has banned cement imports, but still that is banned only for government infrastructure projects. But for, let's say, for instance, a company wants to build a building, or there's construction project, they can still import cement from elsewhere instead of relying on local suppliers. Secondly, Dangote and other cement producers in South Africa, for instance, Language, Halsek, and other competitors. But in this case, I want to focus on Dangote because Dangote is the largest cement producer in Africa. And there has been rumors that it also wanted to acquire PPC, but that one didn't go through. So Dangote has a really strong also brand presence in SA, even though PPC is speeding over it in terms of production. But in other African regions, it still holds weight. So it's a challenge for competition there. And also PPC, or the cement industry, is cyclical. If you remember, in 2010, there was the FIFA World Cup in South Africa, and the price of cement companies and the share price went up. And that is because of the FIFA World Cup in 2010. So cement companies depend on the cyclicality of the economy. So if there's a demand for infrastructure, then the share price of cement companies go up due to that demand. And as I've mentioned also, that Cape Town is one of the provinces in South Africa that has a high demand for houses. And some economic theorist has predicted that the housing bubble in Cape Town is not sustainable because prices are going up so high. And it's going to come to a day whereby people don't want to go to Cape Town because the prices of houses are high. And then they will be forced to drop down the prices, as it happened in the housing bubble in 2008. And also, as I've said, Dangote is one of the largest cement producers in South Africa. And also it has technologies and artificial intelligence that will enhance its production capacity. And also other competitors against PPC also do have technological advancement. And in the annual report 2025 of PPC, they mentioned that they had challenges with technology, and plus the CEO was planning on improving that. So that's one of the reasons why the PPE stock price went down, was lack of technological progress and advancement. So that's a danger. And if they do not address that as quickly as possible, other competitors will come in the industry and advance through AI and technology.